Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Sean Udall on the line, the tech stock strategist. Sean, how you doing this morning?
I'm good. I'm good. How are you two?
We're doing good. We're doing good on this Wednesday morning here. First let's just go to the overall market here. Had the sell-off expiration on Friday. Was kind of looked kind of weak. Looked like we're gonna have a turnaround, and then a grease deal. A grease deal comes out Sunday night, right back up to the resistance at the 2120 level in the S&Ps. What's your call here? I mean, we're not going up. We're not going down.
Well, here's what's interesting. Excuse me. I think if you look at the S&P, we keep kind of going back and forth and not really making any headway in either direction, and it's been real stuck. The difference is, oh, by the way, the Nasdaq, has surpassed the old bubble highs of 1999 and 2000. So I think one of the most interesting observations I can make about the market is that the S&P's stuck, the Dow seems pretty stuck, but interestingly, the market that theoretically should have had the hardest time, hitting all-time highs, because certain luminaries, I won't name names right now, but compared the Nasdaq to the Nikkei and stuff like that a couple years ago, and I can remember people saying quotes like, the Nasdaq will never hit new all-time highs in my lifetime, right? So what I think is maybe one of the most interesting things is the Nasdaq has hit an all-time high, a pretty tremendous all-time high, and it's not even really talked about. It almost gets no mentions, and it just it's probably the absolutely most bullish thing about the Nasdaq. In fact, you could have, because if you had way too many people get over exuberant and was popping champagne bottles over the breaking of the all-time high, that wouldn't be good because sentiment would be too positive. We don't quite have, we kind of have people mentioning bubbles all the time, but you don't have like sort of intense bubble talk on it. So, but it's just an interesting observation. I would have thought NASDAQ at new all-time highs would probably garner a little more press and a little more attention. And I think deservedly so, because, here's a stat that I think is little known, but it's statistically proven. When a major market breaks a brand new all-time high, especially one that hasn't been broken for a number of years, the average move, so this isn't what always happens, but the average move higher is 40%. So, I even wrote a piece up when the S&P broke, was it 1574, was the prior all-time high, something like that. When the S&P broke that high, there was a lot of bubble talk and a lot of negativity at the time. And I said, well, there's quite a bit of statistics in published history that when major markets break all-time highs, the subsequent move isn't lower. It's a 40% higher move on average. So I don't know how long it's going to take, but I'm still, pretty bullish on, especially on the NASDAQ 100, which is relatively cheap outside of a couple stocks. So the other thing is, the last thing I'll say, because I'm sure you got quite a few other questions, it seems like the global currency markets think a grease deal's done. I don't know if the media has reported or we have much evidence yet that a grease deal's done. But given the huge decline in the euro yesterday, or especially Monday and Tuesday combined, the currency markets think that a grease deal's done. And the currency markets are probably collectively the smartest markets on the planet.
I think I have to agree with you on that. If not, they're certainly, setting the market up for a major disappointment if they can't get this done.
There you go. If it isn't done, oh man, look out. You probably better have some cheap hedge protection. Even if it's a total bust trade, you lose 100% on the cheap hedge protection. I have some, just in case, even though I think it's fairly obvious a grease deal probably gets done. By the way, they basically have to get done. I think the thing that I laid out the other day in a note or two is that I think people forget the obvious thing. The obvious thing is, what will Greece transact in if they leave the euro? So before the world existed and there was a euro currency, the world was sort of more used to currency devaluations. And the world was sort of more used to, oh, hey, I have to transact in this weird kind of crappy currency. It's hard to hedge, but I can hedge it. There's a market in it. I can position, I can maneuver. The difference between then and now is everybody's used to transacting in a euro, and it's stable and it's hedgeable. And it's all those things you need. If you're a company and you want to transact business, or you're a country, you can do what you need to do with the euro, right? You can even do what you need to do with gold or the US dollar or various other currencies. Nobody on the planet at this point wants to start dealing in the drachma again. So it's basically unhedgeable. It might have been hedgeable 10 or 15 years ago. It isn't now, and it won't be. So I think the problem with the Greeks, that they kind of think, well, we can do a devaluation. It'll hurt 35, 40%. We'll move on, then we'll have better stuff. I don't think there's anything close to a 35 or 50% devaluation. I think it's more like 85, 90, 95%, because nobody wants a drachma. So therefore, if you don't want a drachma, anytime you get a drachma, you can instantly transfer that drachma into euros or US dollars. And just the absolute, no interest in having a drachma in the world anymore basically makes it very, very hard for Greece not to stay in the euro, in my view.
Yeah,
I think they're coming. I think they're waking up to that conclusion over the weekend, by the way.
I mean, what are they going to do? I mean, if the drachma, who's going to, go to the, take that as a currency? All right.
Nobody will.
No, let's go on to some individual issues. And you and I have been having a lengthy debate on Twitter here. And, man, you're still sticking to your bullish thesis here.
Yeah, I do both. I do kind of three things, right? Fundamental, sentiment, and technicals. Like I would weight fundamentals the highest, technical second, sentiment third. So, there's just, I'm not too worried about the name. I guess I trade every day, but I don't have to trade every day, and I don't need stocks that are moving every single day. So, some of my very best positions long term have been names that I actually owned for more than a year. I know that's a foreign, weird concept nowadays to actually own a stock for more than 4 or 5 days or 4 or 5 weeks, but I still do it. I like to do it. So, Twitter's just going to take more time. By the way, Twitter's been great for me. I'm basically in trade number 4, and what I mean by that, I was never buying Twitter high, and I never have. I've only been really bullish, as you know, and really on the show like at least 2 times in documented history. Where have I been the most bullish on it? Sort of at $35 or below, right? And, when Twitter's 45 or 48 or 50 or above, I'm a net seller of Twitter. Now, the last time around, I was stupid. I should have sold a half. I only sold about maybe a little more than a third. But, I've sold anywhere from a third to 2/3 of my Twitter position around 50, within 4 or 5 points of it. And I've bought the vast majority of my Twitter position, at 38 and below. So the way I look at Twitter is really I'm just in trade number 4. The first 3 trades worked really well.
So what's going to get it going?
Go ahead.
What's going to get it going? You get the rumors of a takeout. It doesn't really seem like that's going to happen. They get Costello out of there. They pop it, then they drop it.
Yeah.
Are we going to have? I'm almost resigned to the fact that I'm going to have to wait until next quarter, and that quarter might not even be that good because of the Google contract. So give us the fundamentals. We can look at the technicals and say,
sure,
man, this thing is having a hard time. You got a triple top over 36. That's what got me a little bit out of some stock yesterday. 3 highs between 36 even 36.28. What fundamental is going to change to make this company turn around? Again, minority view, I almost think they have the fundamentals to deserve a higher stock price right now. In fact, I do. They trade at about a 65% discount to Facebook on growth. And, they're growing at roughly a little over 2x Facebook's growth rate. So in my mind, if they just hold on to kind of existing growth and current fundamentals, kind of the whole valuation matrix and the weighing machine that is the stock market, we'll just start looking at Twitter more favorably if things don't get more negative. That's the key. The key is things can't get more negative at Twitter. They can't. The growth can't descend into 25 to 30% territory. If I think that's going to happen, I'm out of the stock. So, but I think Twitter's growth could possibly reaccelerate. You kind of hit the nail on the head. This next quarter might not be so good. I think basically if you don't get an M&A deal, which I don't think they should do one,
And I don't think, again, I've said in interviews, I don't think Google is the buyer where everybody else in the world thinks they are. So I just think they basically need a quarter like they had 2 quarters ago, right? I mean, again, Twitter's been kind of tainted 1 or 2 times before. All of a sudden they pop 1 or 2 quarters, and lo and behold, the stock goes from 35 to 50 plus. So
You made an
I don't
interesting
really think it
point.
needs that much.
You made an interesting point to me about how people are just, gobbling up these IPOs, the Fitbits, and some of these, the Shake Shacks and whatnot, and they're buying these companies at like just astronomical PEs and expectations here. And the thing that got me interested when we've been talking about this stock was here's a stock that's kind of proven itself, right? It's been out for a while, and it's totally being ignored, and has certainly more of a track record than Shake Shack.
Oh, sure. I mean, well, let's just talk about Netflix. I mean, hey, Netflix is going to spike. It's got a 7-for-1 split. We can talk. I mean, PE valuations in tech are idiotic, by the way. They don't really work. But price to sales valuations work. Total market cap stuff works. EV to EV multiples work. But what I really think works, look at sales growth. So everybody's all gaga over Netflix. Okay. So, and by the way, Netflix is it's a 13.2 bagger from 2012. Some of that is deserved because 52 to 60 bucks on Twitter or on Netflix in 2012 was probably really undervalued for the stock. Not probably, I think. I mean, that's when I really should have bought it because it was coming up, and I mean, everything told me to buy Netflix, and what told me not to was fear. So fear kept me from a really good Netflix trade. Now I wouldn't have stayed in it to fear, no way. But so they have 24% annual growth projected. Right, but everybody's gaga over it. I mean, a bad Twitter is still doing 65%. so Twitter's got 3x. They're almost 3x the growth of Netflix, and they're stumbling supposedly, right? And Netflix has, everybody's going gaga over it, 24%. By the way, Amazon hasn't exactly acted terrible, and their annual growth run rate's about 16 to 18%. So, that hasn't prevented that stock from making a big move from the high 200s to the mid 400s. And they haven't, I mean, Google, let's talk about it. Google hasn't hit, they've missed 6 of 7 or 6 of 8 or 7 of 9 earnings reports the last 9 quarters. They've literally missed 7 of 9 or 6 of 8. I guess one of the two. And, that stock's acted relatively well. So valuations do matter after a time. I think it's just a pile-on effect right now. Everybody likes beating up on Twitter. I personally think Twitter's growth will reaccelerate a little bit. And I think, again, screening versus the universe of stocks available with actually lesser growth rates, Twitter looks really good.
What do you think about Netflix here at 700?
Another quarter or two, no big deal.
Netflix is 700. Buy, sell, or hold. Netflix.
Well, I'm not short it yet. I have to see my technicals kind of tell me. I think it's been a fundamental short probably from about 580 to 600, if not even a little lower. But it's been a stupid name to short, and I haven't shorted it much. I think I've tried a couple put spread trades, which I got scrubbed on. But sometimes the best thing to do is just not do anything on a stock until whatever your particular discipline is, everything hits for it, right? Advice. So Netflix, I think, will line up as a very good short at one point, but I don't know. I don't see it yet. I'll let you know when I see Netflix as a short. I saw AMBA as a short. It was a glaring, most beautiful, gorgeous short in the world, and anything above 115, 120, and at 125, I'm just like, okay, I got to short more of that. Oh, by the way, I got a little lucky on maybe some news, but they cracked that stock hard and it went down, almost 30%. So I think that's when Netflix starts cracking, when you start seeing some chinks in the armor, when you start seeing kind of a crazy looking spiky stock chart, although it kind of looks like that right now, some things are going to emanate. And, by the way, really sharp guy named Ron Barron was interviewed not too long ago. He's a really good growth manager and has been for 2 or 3 or 4 decades. He owned Netflix for a good period of time, and he's either trimming it or out of it completely now. So, I'm starting to see some of this kind of the smartest of the smart money are not really in the stock anymore. They're certainly not buying Netflix with fresh money. So again, hey, the best thing the stock has gone up 13.2-fold since 2012. So trees don't grow to the sky, but I think if Netflix were a tree, it'd be scratching the ionosphere right now.
Okay. So let's just take a look at the Amberella. Did you cover your short?
I did. The
Yeah.
day it was down 25 points or whatever, at around 97, 98, I kind of thought that was about it. I think it went down a couple more points, but yeah, no, that was a 4 or 5 bagger on the puts I had. And I was actually surprised that I knew it was going to bounce. I was kind of surprised that at one point yesterday it bounced out, I think almost 9 or 10 points. So my dream would be on this, that it starts trying to bounce and then the bounces fail. And as you know, when bounces start failing, the short opportunities become better and better and easier, right? So in my mind, Ambarella is definitely on my short list, and I'll be trying more shorts, especially if it bounces back to 108, 110, 115, fails. That sets up very, very good short opportunities. By the way, I'd even add that kind of all the chip stocks that I used to love and now everybody else does. So Skyworks, NXPI, Avago, Ambarella, those four in particular, I have zero interest in being on the long side of those names. So
You got any shorts?
Corvo would be another one.
Any shorts in your portfolio right now?
Palo Alto Networks I just put on yesterday. So
And
in
what?
fact, I basically covered Ambarella and I put Palo Alto on as a short yesterday. That's another one that sets
What you
up.
doing
And
it?
again, this stock I liked a lot. Pardon?
What did you do in it? Did you short the stock or go with puts
No,
or?
but I bought July 170s mostly. I'm in about 2 or 3 different strikes, but I kind of focused my effort on the July 170s. And the reason I went down that far is I just think if I'm right and this cracks, it's not just going to go down 3 or 4 or 5 points. I mean, it's going to be kind of like a mini Ambarella. I think if it cracks and goes down, I think it tests at least sort of the 160 to 165 range. So I'd rather get more puts at a far cheaper price, and if I hit big. If I get scrubbed, I get scrubbed. This is one I'll probably try for the next few months. So if the Julys don't work, I'll probably try August, and if August don't work, I'll probably try September. So I don't know if I'll try it for 6 months in a row, but I definitely will try it for 2 or 3 months in a row.
Okay, just any other things on your radar here? We've talked some longs, we've talked some shorts. Anything else that look interesting to you? I know you mentioned this one biotech stock and has had a pretty good range. I believe it's CALA. What's your bullish thesis on that one?
Yeah, this is a nice little name. So unlike some biotech stocks that have no revenues and have gone to 3 and 5 and $8 billion market caps on promise, this one actually has a lot of promise, and they've actually had some pretty good data. In this case, the data has been safety data because what Kala does, Calitherid, their treatments will be used in combination with other technologies in biotech. So it's not like a standalone drug that is a cure-all, but I've seen these combination companies do better and better and better and really gain traction over time. And in some ways, it's easier for a combination therapeutic company to get approvals. So the last company I had a lot of success with, in this kind of genre, if you will, so a drug in combo genre, let's call it that, was PCYC. Now, unfortunately, I was not in pharmaceutics when the buyout occurred. But I think I caught about 80 points in the stock, about an 80% return. So, you're never wrong making money, and 80% is pretty good money making. But PCYC, that was their whole premise, that their drug was very safe, very tolerable. It worked, and the combination therapies were really good. So Kala I'm hoping it's sort of a mini PCYC. It's still very early stage, very speculative. The one fundamental thing I can hang my hat on, though, they have about 100 to 110 million in cash, net cash on the balance sheet. Where when I was buying some of the shares, I think the market cap was only 130 million. So I was literally buying some of the shares. I owned some about here, a little higher, but I also bought some cheap when I was literally buying it like 1.2, 1.3 times net cash. So you don't get that opportunity in biotechs too often. Now
No.
they're going to burn that net cash, right? But
Right.
still, even all these biotechs are burning net cash until they have a profitable drug. So, even the biotechs burning cash, I mean, they don't trade at 1 or 2 times cash. They trade at 10 or 20 or 30 times cash. So this thing got pretty cheap. The other thing I would say, I kind of like stuff that's been ignored for a few months right now.
And
So
that's
so
it.
cheap growth at a reasonable price, maybe some beaten up stuff. So everything that everybody's in love with now, I'm not trading it, or I'm looking at it as a shorts. And I'm kind of thinking, if the market keeps going higher, and the Nasdaq might, I want stuff that's been ignored for 3 to 6 or 9 months, right? So stuff that still has good fundamentals but is way, way cheaper. And oh, by the way, now, hey, all of a sudden, how does Apple, for example,
Hey, Sean, I hate to
Netflix?
interrupt
Oh,
you.
go ahead.
I
Yep.
got to let you go here. We
Sure.
got to get another
No
guest
problem.
coming on at 9:20. Great information, Sean Udall, the tech stock strategist. Sean, we'll talk to you soon. Thanks for the input.
Take care. Thanks again. Bye.